Hello, it's Eric Ella. I just wanted to make this quick video that shows how I executed one of the trades that I actually did cut out during my weekly market outlook. One of the one of the pairs that I looked at in my previous video was a Euro JPY. If you go through that video, you saw that I, I looked at this setup and said I was actually expecting a a push outside of this descending channel. And yesterday I was closely monitoring the setup, and we were here on Sunday before market opening. But I said I needed something that would push out that represented this arrow that I kept here. I wanted something a push out and then a return before an expected move upward. And the market did that yesterday. There was that very big push, though it was not very impulse, but it moved out of the channel that showed the intention of the market to go up, and then the beautiful pullback that made a return that actually gave us our entry. So the push gives you the intention, but you don't sell or you don't buy immediately that push out or break out. No, you have to wait for a return or a retest of the market. The market has to pull back. And when it did that, I that was when I actually placed what you are seeing here now. So I've actually entered a trade on a demo account to see how it plays out. My entry point was this point, and my stop loss below this last low. So, of course, the fact that the market has given you an entry doesn't mean it must do what you expect. The market will always do its thing. But when you have seen your setup, when you've done your analysis, and the market has given you those things you usually look at for, so you don't have to be afraid. The next thing you need to do is to execute, and then allow the market becomes the judge. So that I've actually done. I've executed the trade already. Just wanted to provide this update that one of our setups that we looked at during the weekend, has actually given us an entry. So of course, you have to be patient, and when you are patient and like throughout yesterday, I wasn't in a hurry. I waited until we got this push. I didn't rush in. I allowed the market to provide this setup. So when I woke up this morning and saw the setup like this, that's a very good entry for you. So I've already executed. Want to, as when you are executing, you want to execute properly. And one of the ways you execute properly is to incorporate proper risk management into your trades. Like for me, the highest I go, or the highest I put at risk is 1%. But for this particular trade, I actually did not put 1%. I actually did put half of 1% of my trade. So meaning that even if this trade hits my stop loss here, it won't take much out of my account. I still have so much to trade. So these are the little ingredients that as new traders you don't know. So when the market gives you an entry like this, you want to at the beginning put so much at risk, sometimes 5%, 10% of your account. When that happens, when you do that, and the trade doesn't go in your favor because you're not the one that moves the market. No. So you just need to have a setup. These are the things, these are the criteria that I look for in my market. For me, when I see a setup like this, I want to see that push out of either the descending or ascending channel. I want to see that push out and then a retest. When I get that, the next thing now you need to do is to now incorporate proper risk management. Don't put too much at risk, because when you put too much at risk and the market doesn't go in your favor, then you lose. When you lose, you lose so much. And when that happens consecutively, that's where people have blown accounts. So that's why you want to look for very good setups. It's not about entering the market. No, you want to wait. You want to look out for setups that are neat, that are clean. Setups that are clean. When you see those setups, you execute them. When you execute them, they go in your favor. For example, based on what I've risked. So if this market hits my stop loss, which is very possible, if it hits my stop loss, like I said, I lose half of 1%, something very insignificant that may not affect my account very much. But what if it goes in my favor? What if it goes in my favor and doesn't get to this point, but gets to just this point where I left it? You can see the risk to reward ratio is 1:4. So meaning that if I lose the trade, I lose half of 1% of my account. What if the trade goes in my favor by 1:4? That means I will get 2%. I will have a 2% account growth. So which is very, 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 very good. It is very, very good, because if I had risked 1%, what it means, if I had risked 1% in the trade, I would have made 4% or 4.27%. But because I risk 0.5%, if this trade goes in my favor, that means I will make 2.27% of my account. So that is how trading is done. Trading is not about hitting a home run. These are things that as new traders, we are never taught. When you see a setup, you put so much at risk, and before you know, your account is blown. You're gone. So, guys, like I said, it was just wanted to make a very short video that will show you how I have executed this trade, and also tell you how I incorporated proper risk management into the trades. Another thing, what I will now be looking at, if the trade goes in my favor, I also want to incorporate proper trade management into my trading. I want to pay myself when the market begins to make money available, as if the trade goes in my favor. I mustn't wait until it gives me that complete 1:4 before I finally hit my take profit. So as the market makes money available, I always want to pay myself. So in subsequent video, I will elaborate more on proper risk management and trade management. So guys, thank you very much. Along within the week, I'm going to provide an update of how this trade went, and also other setups that we looked at during the weekly market outlook. So thank you. See you soon in my next video.